Time now for Futures in Focus. The US dollar fluctuating ahead of the FOMC minutes in just a few hours. Joining us from the CME is Bill Baruch, president of Blue Line Futures. Bill, if everything turns out to be in the minutes that we anticipated would be, so a conversation about, being patient, changing the language, the balance sheet and so on, will the dollar move?
I think the dollar would ultimately weaken if it is in line with what we have seen. However, I don't think that's the case, and I'm not looking for a big swing, but I do think the Fed finds a bit of middle ground. Historically, especially during the tightening cycle, they use the minutes and they use some of the jawboning up to the meeting and the policy meeting itself to really middle out the sentiment. And I think if they became more dovish, I think the minutes point more of a middle ground, and really that could support the dollar. One of the things I'm keeping an eye on is this run in gold, and I've been very bullish gold, but I think it's a time to look for a little profit taking, for a buying opportunity in gold. But again, I think the Fed middles it out a bit here with those minutes today.
Now we are back up again. A little while ago, WTI was down about 1%. Now we're at 56.41. Is this the continuing story of Saudi output cuts and OPEC Plus output cuts, Bill?
Yeah, well, if you just take crude itself, pull out the over-exacerbated sentiment and risk assets right now, and take away the global growth fears, and focus on just crude oil, we're going into a seasonally bullish time of year for energies. And ultimately, yes, those drop in exports from Saudi Arabia, what's happened with Venezuela, all this is bullish for crude oil. And then on top of that, you have a technical breakout above 55.5. Really, there's a 100-day moving average on the continuous at 57.20. Really, this could target as high as 59.5, but ultimately some of those other issues, over-exacerbated sentiment, as well as just the market itself, if it pulls back, crude will go with that.